Hello and welcome to Crypto Weeklies. In this video, we are going to discuss VeChain and its ticker VET. None of the content is financial advice. Let's get started. Over the last 24 hours, there was a minor correction in the crypto market, where in which amongst a wider crypto market downturn, VeChain and its token VET had a slightly bullish outlook. You can see that using a performance barometer on cryptoweeklies.com over here under the Heatmap analysis. So VeChain is the only crypto which is up over the last 24 hours, at least amongst the major ones. For the last 7 days, it's the second most rallying crypto, up by about 13% over the last 30 days. It's rallying in terms of the number of percentage, again slightly down, close to negative 0.86 over the last 90 days. It did rally, but it did not make a significant dent compared to its peer over the last 90 days. But over the shorter time period, although over the last 90 days down by about 3%, over the shorter time period, if you look at the technical analysis of VeChain, going back to this June 2023 ascending line of higher lows, it did reach the low in June of 2025, almost 2 years later, on this ascending green line, and ever since that happened, price did shoot up back to the upside amongst a bullish seasonality for the wider crypto asset class. Right now, the 2.6 cents price action comes close to the 20-week simple moving average, at rounded off at around 2.5 cents, and 21-week exponential moving average coming in at around 2.58 cents. Price is slightly above those two levels. If you look at the current price action in terms of the forecast potential, using the machine learning based price forecast for VeChain in a non-euphoria bull run, this is the weekly average price of VeChain on which the machine learning model is trained using seasonal RMA, LSTM and XGBoost machine learning techniques, and the confidence levels corresponding to statistical measures. The yellow line over here is the bull case for VeChain in a non-euphoria bull run. Over the next 6 months, the price for this model could double from the 2.6 cents to about 5.7 cents in a non-euphoria bull run, and closer to the end of year, it could be close to at around 5.2 cents, which is exactly 2x of the 2.6 cents. In a euphoria case, that is a 2 standard deviation move in the bull run, with the confidence level of 95% that the price stays within the bounds of this orange line between two, well, for this week ending on August 31st at 3.3 cents towards the end of the year at around 10 cents. So 10 cents which in for the next 3 to 6 months, it would be considered a 2 standard deviation or a euphoria case for VeChain. The 3 standard deviation, which is a parabolic blow off top, still considers the possibility of a new market cycle high for VeChain, or all-time high for VeChain, compared higher than the 2021 high at around 21 cents at a weekly average level, at somewhere at around 24 to 25 cents if the market exhibits a 3 standard deviation move. So those are the 3 scenarios. Right now, the most likely scenario is the yellow line, as the price action has not moved as much as it should have compared to the rest of the asset class. But if it does, the second line to look for is the orange line. If, let's say, week by week the price ceiling or the price action beats the yellow line and orange line, so for example, towards the end of month September 2025, the price is meaningfully above that 5 cents target per the orange line, then and then only that the red line does make some sort of sense. Let's say towards the end of the month of September, the price is closer to 7 cents than 5 cents, then we can take a look at the red case or the 3 standard deviation case. At this point, the again, not financial advice, the yellow and the orange line do offer some sort of a guideline going forward. In terms of the regression based fair value for VeChain and its token VET is at around 6.3 cents at this point. That means per this valuation, the price action is not just lower than the fair value, but the polynomial regression based fair value, but also the one standard deviation residual drawn to the downside from the fair value. And anytime the price action has been below the green line, they have correspond to a asymmetric buy zones in the depths of the bear market. Right now, again, there is an upswing in terms of the regression based fair value calculation and the residuals because of the non-linearity of the polynomial regression model, which takes into the account the boom and the burst cycles in the crypto asset class. Right now, the one standard deviation residual is at around 3.2 cents. That could be a key area to look for. So per this model, anytime between any price between the current price and the 3.2 to 3.4 cents is considered deep value zone for VeChain. The opposite of this one standard deviation residual to the downside in the green line is the one standard deviation residual to the upside in the yellow line. Together again equidistant from that fair value in pink line. Together with the yellow and the green line, the price action stays about 68% of the time, or one standard deviation of the time in these bounds. The one standard deviation ceiling for VeChain is at around 11.8 cents. So that's slightly higher than the Euphoria case for VeChain as established by the machine learning model. If there is a two standard deviation rally, that is as the rally for VeChain was back in December of 2024 when the price overshot that 7 cents level. Back then that was the uh, that was the two standard deviation ceiling, that orange line ceiling. If that comes to fruition, the price could be close to that red line on the machine learning based 3 standard deviation forecast at around 22 cents. So that's the regression based estimation for VeChain. If we were to look for the individual risk based models at a daily level, based on the risk and price color coded with respect to the regression based risk. Right now the regression based risk is fairly low, only 2%. Whenever it's less than 10%, like, or less than 0.1 on this chart, that has provided a decent buy zones. Again, no individual model can claim 100% accuracy, but again, at least this model helps identify whenever the color codes are in this purple region, that the price is at least not in a short-term bubble. In terms of what makes sense to look for the price action in terms of the risk-based valuation going forward, between 0.2 to 0.5 risk, in terms of those kind of regression based risk levels are, if they are ahead of us, what could they correspond to in terms of price action. At 0.2 risk, the price action could be close to 5 cents. At 0.5 risk, at around 11 cents, providing a range between 0.5 cents and 11 cents, sorry, between 5 cents and 11 cents. That guidance using the machine learning based model as well as this regression based confluence at around 11 cents makes a key compelling case. The end of this towards the end of this high risk on this higher risk levels on this regression based valuation at around 0.8 to essentially 100% risk, between 80% and 100% risk, the price forecasted is between 18 cents and 23 cents for VeChain using this higher risk model. So if there is a euphoria case in this remainder of 3 to 4 months of the bull run, the 18 cents to 23 cents per the regression based model is theoretically possible. In terms of the 20-week simple moving average, right now the risk is 0.19, second best time to DCA per the model. If the risk levels go to that intermediate risk between 0.3 and 0.5 on this model, that could correspond to price action between 9 cents and about 13 cents. So again, a area of confluence around 11 cents. This is slightly optimistic than the regression based model over here, although the higher end of the risk levels are quite similar, between 19 cents and 23 cents is forecasted using the 20-week simple moving average based risk estimation. In terms of the time weighted average price, the prices are below the time weighted average price. The blue line over here is like a line in sand. That is the time weighted average price for VeChain throughout its entirety of uh, the of its existence. That is coming in at around 3.2 cents right now, as the price is below the 3.2 cents for this model, as well as the regression based undervaluation model. If there is with the hypothesis, if there is a bull run and if VeChain participates in the bull run, accumulating below the time weighted average price, again not financial advice, historically speaking, has been not the worst idea whenever the prices are below the blue line, and especially in the bearish phases, or in midst of a bull run, or dip in midst of a bull run, below the time weighted average price for VeChain, historically speaking, has been a buy, great time to buy. The time weighted average price risk is right now zero, as the price is trading below the time weighted average price. Again, this model, uh, the time weighted average price risk, as at uh, during the December rally, you can see went as high as about 60%. Right now it dropped sharply from that level to zero, as the price action went below the time weighted average price. Overall, the estimated bull run peak for VeChain as a confluence of the three risk based model, the regression risk, the time weighted average price risk, and the SMA risk, is at around 49 cents. That's about a 19x from here. The hypothesis with this uh, euphoria calculation, or any um, hyper bullish case calculation, is that if all of these individual risk based model were to go to 0.95 risk in unison, then what could be a theoretical bull case bull case peak or ceiling at that price action would correspond to about 49 cents, representing a 19x reward, which is a very stretch goal for VeChain. The most area of confluence, as mentioned earlier, is at around 11 cents, that 0.382 fib level without a euphoria, and with euphoria at around point seven between 0.786 and 1 at around 22 cents to 23 cents. With that, I would like to conclude. Hope you enjoyed the content. If you did, please give a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.